The pain trade is here as stocks are about to rally. I'm your host, Steve Van Metre, and thanks for joining me for part one of the Sunday Chart Show, where we look at the momentum and technicals of the S&P 500, Nasdaq 100, Russell 2000, and junk bonds. Let's kick today's show off with the S&P 500 that's looking to rally. The only exception here could be the Fed's liquidity drain, could be the big problem. But from a technical standpoint, stocks are looking good. Let's start with our breadth indicator, the percentage of S&P 500 stocks above their 50-day moving average. Notice the trend is rising. It's just under 29%. And what you're looking here for is participation. So when more stocks are moving above their 50-day moving average, it's considered bullish. That trend can pull stocks higher. You notice the trend is rising faster than the equity market. That is a great short-term indicator for higher stock prices. How about we zoom out to the percentage of S&P 500 stocks above their 200-day moving average, now just shy of 20%. And notice that it's not seeing quite as much participation. The reason being is the 200-day moving average is much higher for the equity market. It's going to take a lot more effort for stocks to reclaim it. But notably, it is trending slowly higher, not as much as we'd like to see, but it is trending a little bit higher. Of course, we'd like to see more. And what are traders looking at here? Because you can see kind of a double dip in breadth, so to speak. And notice I've circled a couple data points here where breadth kind of picked up steam and then it started to lose back before it rallied higher. So this is okay. A little weakness on the 200-day moving average is not going to be a problem for breadth. How about we look at the momentum indicators? We've got the relative strength indicator, or RSI. You're looking for a number of 40 or higher. Around 30, you are oversold. At 70, you're overbought. Notice momentum is trending higher here. That is moving right alongside stock prices. That is a positive signal. So momentum to the upside right now, as it just sits under 50, is looking to break higher. How about the MACD, your moving average convergence divergence strategy? What you're looking for is a crossover of the black line, or MACD line, through the signal line. The red line, positive cross, means momentum now is building higher. Notice that momentum crossed just after stock prices bottom. It's a lagging indicator, makes perfect sense. Momentum is building higher, stock prices are falling. That is fantastic news for those who are bullish on the equity market. Now, how about Momentum Timer Pro? Now, this is a momentum indicator. It scans ETFs, hundreds of them, looking for opportunities, and what it takes is the RSI over 40. That's a buy signal, or a positive cross on a MACD is a buy signal, or its own signal, which needs 2 of the 3 to confirm. 13 consecutive days of buy signals. Notice it's still broadly in a downtrend. The 6-month and 3-month signals say none. The 1-month signal is at a midpoint, so it's building momentum back. Now, if you're a long-term trader, you need to wait a little bit longer, but short-term traders, well, you've got it as we continue to look now at the charts and see what's going on, because Momentum Timer Pro is amazingly still free. I'll put a link to in the description and up in the corner for you to sign on. Your first report Monday is at 8:30 a.m. Eastern. All right, let's look at the S&P 500 here. We're using the SPY, the largest traded ETF. We've got the volume profile turned on. We've got the RSI. We've got the MACD. And I want to note where you see this bottom in price here going back to June 15th. What are you seeing down here? RSI oversold. You're seeing MACD bottom out, and as they build, notice the price starts to rally higher. That is a good sign. What are you looking for at the moving average? You're seeing it starting to cross the 21-day moving average here in red. It's still got to catch up to its 50. If you want to know why that breadth on the 200, well, there's the 200. It's way up there. So what's really going on here is you're seeing, of course, a movement between supply zones, and that is what's critical here. You'll notice it's coiling between the two. It comes down here into buy zone, hits a sell zone, buy zone, sell zone, buy zone. At some point, these sellers up here are going to fall aside, and that's going to take prices higher. That's at least what we're seeing in Momentum Timer Pro. What it's doing is building up that monthly signal, and once you get to that 3-month window saying, hey, that's a move from none to min, that is your indication that there's a much stronger rally, because the technical, those signals are building up. That is a positive sign. Now let's look at the weeklies, because there's something else to note here too. On a weekly basis, you want to know why buyers are going to come in here. Look at the RSI. It just came off of oversold levels on the weekly, and in the past, here's one when it did. Here you see again, and these have been strong points over the last 10 years. In fact, this really doesn't happen hardly at all. And look at the MACD, deeply oversold. So what this is telling traders, if you've got money in your pocket, come in and join us, because we're going to try to take this thing higher. So right now, pain trade of the S&P is higher. Of course, the risk is the Fed, who is going to try to continue to drain liquidity. All right, let's take a look at the Nasdaq 100. We'll start out with its breadth indicator, and we'll note that the percentage of Nasdaq 100 stocks above their 50-day moving average is at 44% and rising. It is absolutely leading stock prices higher here. So this is a positive sign, saying that we're going to see higher stock prices fall on tech side for sure. Have the percentage stocks above their 200-day moving average. You'll note that it's moving higher too. Not as much. Again, the 200-day moving average is way up there. So we need to see that 50-day breadth continue to move higher. But overall, they're both trending higher. That is a positive sign. From the big picture, you're almost noting that this is starting to look like it's bottoming out. We don't have a lot of examples of this, but it looks like the breadth is starting to bottom. That's what traders are looking for. They think the bear market's going to end. They think the Fed's going to capitulate. The Fed has no sign of doing that. How about the RSI? Head over to our momentum indicators. It's at 51, almost at 52. Note, momentum building, price building, good signs. How about the MACD? You got your positive cross, momentum's building here. All it's telling you is price is likely to head higher. How about Momentum Time Pro? 14 consecutive days of buy signals. So all you have to do is sign up for the report. Like I said, still free, still broadly in a downtrend. So if you're a longer term investor, then you need to wait for this 3-month signal to go from none to mid, and you want a positive signal here, which is a minimum or higher. That is what you're looking for. Let's take a look at the charts. By the way, I want to mention on the S&P 500, I forgot to do this. Let's zoom in on your volume profile to the 30-day window. Note, where are all the buyers? They're coming in and buying all these dips. That is what you're looking for to push price higher. Notice over the last 30 days, there's not a lot of sellers here, just a little bit. Notice the volume profile much smaller, telling you this could break through very, very easily. Let's take a look at QQQ. Same story in the last 30 days. Sellers relatively weak, not a lot of them. There's enough to keep pushing prices down. Buyers strongly buying at these levels. That is a great sign, again, for a counter trend rally to take prices up, at least into this higher supply zone. Same thing with the Nasdaq. You know, it's bouncing between supply zones, but it's building strength. Those lows are moving higher. Those of you that are traders know that's a good sign. The 50-day moving average is going to start to bottom out pretty soon. That tells you there's a move at least to that higher supply zone. And let's look at the technicals below. We got the RSI, we've got the MACD. You notice they're building strength as price is moving higher. That's a good sign. How about the weeklies? And you can see these two deeply oversold, and this doesn't happen much, and that's where you're going to get these big rallies from. You see one here, one here. You're seeing these oversold levels here. MACD is about to cross on the weekly. And again, if you're a trader, you're looking at this saying, this is golden opportunity. Now, the only question is, will the Fed's liquidity drain put it into that? We'll soon find out. How about the small caps? Remember, we need those to lead the large caps. We have to see the Russell 2000 stocks above their 50-day moving average. This is sitting just right around 40% and been trending higher. It's kind of flattened out, but looking to move higher. And that's leading. Here we see the stocks. The stocks are not sitting right back near up their recent highs. So that means breadth is positive to the upside. Again, sending stocks potentially higher. How about we zoom out to the percentage of Russell 2000 stocks above their 200-day moving average? We notice that it's starting to trend a little bit higher too. That's a good sign. And broadly speaking, this too is looking like it's starting to bottom. The breadth is just struggling to go lower. That's a good sign. When you start to see that, that tells you that it has bottomed out. Of course, again, it's all about the Fed. How about the RSI is sitting at just under 49? Positive momentum here on the RSI, leading stocks higher. That's a great sign. How about the MACD? Nice positive cross. It's moving higher too. Sure, it's not just shooting straight up, but momentum's building. That is excellent. Momentum Time Pro, also 13 consecutive days of signals. on the IWM, but still broadly in a downtrend. You can almost ignore the 6-month signal at the moment. It's probably lagging from the prior 6 months, the early phases of it. The key here is the 1 month is building. That's going to kick the 3 month. That tells you that perhaps a bottom is in. Let's take a look at IWM here. And what do we note? Similar story to the rest of them, but you'll notice these lows are getting a little bit higher, and when that happens, you come down here to the RSI. Notice it's building as prices are going higher. How about the MACD? It's building as prices are going higher. And bottoms take a little bit of time, and that is a good sign. Let's zoom out to the weeklies here, the 10-year weeklies, and note, the RSI oversold, oversold, oversold. Oversold. Every oversold time on the weeklies, you've seen a big rally. So again, pain trade to the upside. Note the MACD, very low levels. How about the volume profile on the short term? Again, over the last 30 days, you're seeing buyers come in here above. There's not a lot of sellers, at least for the moment. This is all about the Fed. The question is, who will reign supreme? Can we get a nice rally off of this? Well, we'll soon find out. And let's wrap this part up with junk bonds. And even they, as a risk asset, are starting to see money flow. RSI sitting at 55. Nice build in RSI, momentum building, taking price higher. How about the MACD? Nice positive cross. That's a good sign. Momentum Timer Pro, you got to sign up for that on and see the next report on Monday. If we're not ready for that screen just yet, there's HYG, and note, what do we see? We're on the 2-year window here. Notice, let's go into 30-day. What do we see? Buyers below. Everybody's coming in now and doubling down on their risk assets. How about the weeklies? What do we see? Massively oversold levels, oversold. So you note right here, you get oversold here, oversold here. These have been buying opportunities. The MACD is suggesting that. So what you're noting here is, of course, people are buying this at every opportunity. And let's go back, where are we on the 5-year chart here? And you can see people get excited about this. It's all down to the Fed. Will the Fed put it into this party? We'll soon find out. I'm Steve Van Metre. Thanks for watching. Thanks for being fans. We'll see you soon for part 2. Bye now.